Welcome to my channel. In this episode, I'll walk you through the difference between speculation and long-term investing. And I'll share why the long-term approach not only helps you sleep better at night, but can also leave you with a healthier wallet. Let's start with speculation. This is when you buy and sell stocks over a short period, sometimes within minutes, sometimes days or weeks. The goal is to make money from a quick price jump. It's a bit like betting in a casino. You might win, but the odds are usually against you. Long-term investing is a completely different game. You buy solid assets, like a broad market ETF, and hold them for years, regularly adding to your position. You're not worried about daily ups and downs. It's like planting a tree. At first, nothing seems remarkable, but after years, it gives you shade and fruit. Let's look at this in a table. Speculation, short-term horizon, high risk, high stress, and the need to constantly watch the market. Long-term investing, years, lower risk, a more passive approach, and peace of mind. And most importantly, the chances of success. With speculation, most people lose to the market. With long-term investing, if you stick to your plan, history shows you have a good chance of making a profit. Now let me tell you why speculation is so difficult. First, the statistics are brutal. More than 80%, and according to some studies even 90% of active traders lose money in the long run. Second, psychology. People have a natural tendency to hold on to losing positions. It will bounce back. And to close winning trades too quickly. I'd better take this small profit before it disappears. The result? Small losses turn into big ones, while big gains slip away. Then there's the stress. You watch the prices non-stop, afraid you'll miss something. On top of that, commissions and taxes can eat up a large part of your profits. And finally, the trap of overconfidence. After a few successful trades, you start to feel like Warren Buffett, until the market shows you otherwise. Why do I prefer long-term investing? In the long run, time is your ally. You benefit from the power of compound interest, profits that generate more profits. You make decisions less often, so emotions have less influence. And broad stock market indexes, over the span of decades, almost always rise, even after major crises. Take an example. 10,000 invested in the S&P 500, with an average growth of 8% per year. After 20 years, you'd have more than 46,000. And all that without the daily stress. How do you start long-term investing? I explain it in detail in the video above, how to invest even small amounts. Step 1. Define your goal and your time horizon. Step 2. Choose a simple strategy, for example, an ETF that tracks the broad market. Step 3. Contribute regularly. It can even be a small amount, but every month. And Step 4. Stick to your plan. Even when the market goes down. Remember, this is a marathon, not a sprint. Speculation is an exciting game, but in this game, most people lose. Long-term investing, on the other hand, is a strategy where time and patience work in your favor. If you want to see step-by-step how to build a portfolio that works for you, subscribe to the channel and check out my beginner's guide. See you in the next episode.